So do you anticipate in that sort of future strategy being in a position where you might extend Bitcoin credit to institutions, distressed institutions or sovereigns at some point in the future?
Yeah, well, when we sell credit, we don't buy it. Okay, so when you say extend credit, we won't be making a loan to them. We will be offering them our credit instrument. So if you're a nation state and you want 10% yield, you'll buy our credit instead of buying something that yields 3%, right? We will sell the credit, create the credit, right? And I think our view is we want to create, not 10 billion, but 100 billion and then $1 trillion and then trillions of dollars worth of credit backed by digital capital.
We talked a little bit about the different types of treasury companies, the pure plays versus, companies that have a significant operating business. What trends haven't you seen that you're anticipating, or kind of what's the alpha here? What should companies continue to experiment with that you think would be effective?
I think that there's an opportunity for crypto exchanges to be more aggressive adopting a Bitcoin treasury strategy. I think we might see that. I think we could see more adoption from the Geminis of the world or the Blocks or the Coinbases of the world, because they're now publicly traded entities in the capital markets. And so you might see something interesting there. I think insurance companies, especially public insurance companies, could start to embrace digital capital. And they have a lot of capital to invest, and so they could move their own balance sheets, or they could start to change the way they operate. I think there are a lot of financial players that are innovative. The Apollos, the BlackRocks, the Blackstones of the world. They're publicly traded, so you would wonder if you're BlackRock and you just had the most successful ETF in history, maybe you might want to hold some Bitcoin on your own balance sheet. Right? And take advantage of that. So I think you'll start to see more interesting credit instruments or equity instruments created by financially sophisticated players in the crypto economy. And if it doesn't come from the big players that are established right now, then you'll see the smaller startups, the pure Bitcoin treasury companies, they'll get into space because there's a vacuum. Just like Coinbase is filling a vacuum left by traditional banks because the banks don't want to custody Bitcoin, so Coinbase has got the ability to fill it. If the insurance companies or the crypto exchanges don't embrace Bitcoin, well, then you'll see smaller startups like a Strike or something that will embrace it, right? And if you go public and you start to raise a lot of capital and then you build it into your wallet or you build it into a credit offering or something, then I think that could be compelling.
So as things kind of continue to play out, the game theory is interesting. It's compelling. How do you think about the future when it comes to maybe consolidation or M&A opportunities with Bitcoin treasury companies in a significant drawdown? Is strategy sort of the buyer of last resort in these scenarios?
No, here's what I tell everybody. I expect Bitcoin to go up 29% a year on average for the next 21 years, right? I'm expecting $21 million Bitcoin in 21 years. So I expect Bitcoin to appreciate 21% a year thereafter. The risk-free rate is 29%. If I do nothing, take no risk, if you're in the Bitcoin network, every single investment idea you consider has got to return more than 29% plus a risk premium plus another premium for the headache. And even if you did that, there's a diversification discount. And the thing you got to keep in mind, and when you're running a public company, is there is a diversification discount. If people look at my company and they say 100% of the risk and 100% of the return is levered to Bitcoin, It's a very easy business model. You can go to our website, you can crank in the Bitcoin volatility, the Bitcoin ARR, the Bitcoin price, and it spits out the risks, the fair credit spread, everything. It's very simple. You can update it every 15 seconds. If we were to go and buy another company, buy X billion-dollar company that we think was 40% undervalued, now it takes like an hour for someone to figure out whether that's right and wrong, and it takes 10 years for them to know we were right or wrong. Okay, you've just created a diversification discount. You've turned something which was transparent, where I know exactly what I'm getting in 15 seconds, to something where if I believe you after an hour, maybe it's better, but how many ideas do you have that are guaranteed to return 40% a year for the next 20 years?
No.
Like I've never seen a public company that ever did an acquisition that promised 40% return every year for 20 years, right? So when you think about Bitcoin, the right way to think about it is you're a public company. You have $1 billion of capital. You have an option. You could go buy $1 billion of Bitcoin at 1 times revenue, and it's growing 55% a year. You can buy something growing 55% a year at 1 times revenue.
Right.
And all of your investors already understand it and support it. Long term, you can buy something that's going to grow 29% a year, no risk, no integration headache. You can buy something growing nearly 30% a year at 1 times revenue, and all of your investors back it, right? There's no one holding our equity that doesn't believe in Bitcoin, you see?
Right.
They're all Bitcoin maximalists. So why would you do anything other than do the same acquisition at 1 times revenue of something that's hyper growing monopoly, growing 30% a year? We've done that like 77 times or something. Right? So when I look at M&A, I think the perfect M&A partner is Bitcoin. You have a chance to buy the dominant digital monetary network growing 30% a year for the next 20 years with zero risk and keep doing the trade over and over and over again.
Yeah.
Why would you ever do anything else?
Yeah.
Right? And when you do the other thing, you're going to create opacity. You're going to create a diversification discount. Conglomerates normally trade at a discount to their net asset value because people think that was a dilutive transaction. It was a dilutive acquisition. It's distracting. So I think that companies, that there is a place for companies to buy a Bitcoin treasury company trading at less than NAV. It won't be us. Right? The world's full of companies that do M&A. There's a lot of people that would rather buy equity. There are private equity investors and there are public companies. They like to buy other companies. That's their business model. By the way, none of those companies are Bitcoin maximalists with 100% of their balance sheet invested in Bitcoin, right? They're not Bitcoin maxis, right? There's a lot of if you're a fiat maxi or if you're a whatever maximalist, and, you might look and say, hey, I believe in this company and it's trading, I can get the business for free because it's trading at its Bitcoin balance sheet. You'll go buy that company because you feel like you're getting the operating business for free and you're getting the Bitcoin in the mix.
Right.
And that's what will support the value of that company. So I think it makes sense, you buy a retailer losing money, that's valued at its Bitcoin.
Yeah.
They'll get bought by another retailer.
Right.
And the other retailer will be like, I'm going to get rid of the cost and I'm going to rationalize the business and I'm going to strip out the Bitcoin because I see the value in the Bitcoin. But I don't want to be in the retail business, you see?
Yeah.
I don't want to be in a money losing. I don't want to buy a business losing. If the business is trading less than the Bitcoin, it's because the marketplace perceives a liability in the operating business. Right. And so I'm buying the world's greatest business in the world, the digital monopoly, growing 29% a year for the next 20 years that all of my investors love. I'm buying that Why would I want to go buy a bunch of troubled businesses that have problems that I have to solve, and I'm going to be throwing my investors' money to solve the problem? That's not what they want, right? So it doesn't make sense for a pure play to buy another Bitcoin treasury company or to buy another company with Bitcoin. It totally makes sense for a private equity investor or an LBO or another conglomerate. They've got all their own dynamics. They'll do the trade. It will be a benefit to them.
Yep.
It will be a benefit to the Bitcoin treasury company that will, the equity will trade up more, right? And it all just comes down to, what is your cost of capital? And if you're a Bitcoin maximalist, your risk-free cost of capital is 29%. If that's what you believe Bitcoin's going up at for the next 20 years, and that's what I believe, most people don't have a risk-free rate of 29%. There's a lot of a fiat maxi in Switzerland. Their risk-free rate is minus 50 basis points, you see. So other companies will have other cost of capitals and other outlooks because of their frame of reference. They will actually do those transactions.
Well, you just keep buying Bitcoin there. That makes sense. So, I mean, does this playbook work in every public market? I mean, there's some untapped markets. We haven't seen really anything happen in Africa yet. Where does the most opportunity exist that you see? Is there markets that are being overlooked right now?
Okay, well, for every company in the world in any capital market, they're always better off to buy Bitcoin as their capital asset. If you're in Cuba, but it might be illegal in Cuba, but you're still better off as a Cuban company to capitalize on Bitcoin, right? North Korea might be illegal, but you're still better off, right? So barring the legality of whether you can do it, you're better off in Venezuela and Nigeria, every country in Africa, you're better off to hold the Bitcoin for the obvious reason that it's going up 55% a year, and it's going to go up nearly 30% a year in dollars. And most other capital assets are either collapsing against the dollar. Local credit, local currency is collapsing against the dollar in Africa, right? Or it's pegged to the dollar, right? And so every company should capitalize on Bitcoin. Now, the next question is, if you're a public company investor, where could you create the screaming metaplanet or strategy return? How do you get a 10x or 100x return on your equity? The most compelling opportunities there are mature, large capital markets suffering from financial repression. So what you'd like to find is a capital market like the Swiss or the Japanese. It's big. There's $1 trillion in it, but the risk-free rate or look at the 1 month government T-bill rate, and when it's 0 or when it's 50 basis points, Bitcoin's giving you 55%. You can borrow money at 5%. If you offer 500 basis points more than 0, you borrow 5%, 5.5%, then you've got massive leverage. You're investing at something like 30% over the next 20 years, and you're borrowing at 5%. That means you're capturing 100% of the spread up front, and you're capturing, initially, 80, 85%, and it's compounding to 95% over the decade. So you're capturing 100% on the front end and 90% plus on the back end, and you can generate 4 or 5x leverage, or 50% leverage, or 60 or 70% leverage on your balance sheet. You could do 4x the Bitcoin return, 5, 6, 7x the Bitcoin return. So in theory, a pure play company in one of those markets, in any European Euro market where the risk-free rate's 200 basis points, Switzerland, Japan, those are all great. If the U.S. SOFR rate comes into 200 basis points, that's very bullish for every single U.S. Bitcoin treasury company, right? Because now you can offer 7% dividend yield, invest in Bitcoin. You'll capture 90% of the back end, 100% of the front end. It's a screaming profitable business for you.
I want to talk a little bit about this narrative of tokenizing the world. It seems to be one that kind of doesn't really go away. What's your take on sort of how this plays out in the Bitcoin ecosystem? What's the next asset that gets tokenized?
Well, I mean, the idea is you'd like to move everything at the speed of light. And so why not tokenize dollars? Why not, even Bitcoin tokenized on the Lightning Network, right? Or tokenized somehow. Everybody wants to move the Bitcoin in a second, then they'll want to move it in a millisecond, right? So tokenize Bitcoin on a layer 3 would actually have use, right? You can tokenize every stock, every bond, right? BlackRock has tokenized U.S. Treasuries in one of their instruments. And if you tokenized Apple stock or Microsoft stock, then people could take custody of Apple stock in India on Saturday afternoon.
Yeah.
Okay, so tokenization makes the entire capital markets work more efficiently, more egalitarian, faster, smarter, stronger. And it also provides the power of self-custody or quasi-self-custody, right? It takes you to a point where if you tokenize on a decentralized network, then equities and securities could look more like bearer instruments, right? When you're holding the security at a regulated custodian in New York City and, you're on the sanction list, you lose custody of that, right? So tokenization could provide a quasi, a higher property right and a higher utility to a lot of financial assets that have value to people. Right now, I think where we're at is there's broad consensus that things should be tokenized. There is support from Atkins at the SEC and Kentez at the CFTC, and from the Secretary of the Treasury, Scott Bessent, that, we should lead in digital assets, which means tokenization of all form of assets. We only have one law, the Genius Act, which kind of touches on the tokenization of dollars. But it goes part way to establish a framework for the tokenization of dollars, but it doesn't fully empower them to be utilized. I mean, there are a lot of constraints in the Genius Act, like for example, you can't offer yield on a tokenized dollar unless you're a bank, right? So there are some constraints, and there are some obligations, but there's also some legitimization. And the Genius Act. The Clarity Act is really the next thing up on the docket, which will be the priority this fall, probably for the rest of the year. And there at some point, there'll be some understanding of whether you can or cannot tokenize, but the Clarity Act doesn't fully embrace the idea of digital securities yet. So it's not clear to me whether or not you'll have tokenized securities of stocks and bonds and real world assets codified into law, even after that act. And so there's going to be a gray area about what the law allows you to do. And because there's a bit of a gray zone, that actually creates some ambiguity about what's the right technical approach. For example, if the law said it's okay to tokenize this stuff and move it, peer-to-peer at the speed of light, there's nothing that stops Apple from tokenizing every stock on the Apple Pay network. But because the law doesn't make it clear whether Apple has liability if you transfer, securities between sanctioned individuals in India, right? It kind of is going to slow down Apple, which means that the decentralized networks or quasi-decentralized networks will have an advantage because they could tokenize and they don't need regulatory clarity. And so I think that we're moving toward a world of de facto recognition of digital securities and digital tokens from the SEC and the CFTC, and it'll come through the rules process, but we don't quite have it yet. And I don't know if we'll get in law legitimization or legitimacy for tokenized stocks, bonds, or other crypto tokens, not for a while. So I would say we're in this in-between period where there'll be leadership. Probably the leadership will come from the cabinet. The industry will adopt things. They'll become de facto, standards. And as the de facto standards build, you'll see a lot of capital flow in to these standards. And maybe they'll be codified in law before 2028. Maybe they won't. Maybe there'll be some, controversy over it. I can't say at this point. The only thing that's very clear to me, right, the greatest regulatory clarity is Bitcoin is a digital commodity, right, and you can hold it as a store of value, and you can issue digital credit against it. I think a certain lesser clarity is you can create a stable coin if you're a corporation and not pay interest on it. And you can create a stable coin if you're a bank and maybe you can pay, maybe you can tokenize your deposits. There's a little bit of clarity there. And I think the rest is it's a wild west, but it's a wild west in a liberal, progressive political environment where there's support from the White House and the SEC, Treasury, and the CFTC. And 2 years ago, it was a wild west, but in a regressive, cynical, skeptical environment without political support, where the White House, the SEC, the CFTC, and Treasury were against. And so that's where we stand today.
Love that. Michael, that's all the time we have. Thank you so much for having us. Really appreciate the conversation. And thanks for hosting us.
Yeah, my pleasure. All right.